So in the last recording then, we've done part A, we've worked out the profit after capital allowances that's going to go into our tax calculation, and now we're moving on to part B, which is working out the corporation tax. So I'm going to carry on from what we've worked up here, and this is quite a common question where you have to do the adjusted profits and then calculate the corporation tax. What I will say, don't worry about whether your part A is correct. The figure that you are going to put into your part B will be your own figure, and that's how it will be marked. So if you have got a different figure to mine, and the chances are in the exam you will make some sort of mistake, then you will just carry on with what you've got. I've just noticed I can't add up, can I, in part? For some reason I can't add up in part A. What on earth was I writing there? I just looked at that figure and I thought that doesn't look right. That's actually 660,000. I've no idea where I've worked that figure out from. Let's correct that. Apologies for confusing anybody. My inability to add up, but for anybody I normally teach, you know that's fairly normal. So that figure from part A, you will carry it forward into part B. Now what we need to do is look for any other income I need to pay tax on, and a good starting point is to look at what you disallowed up here and ask yourself the question, well, I disallowed it because it wasn't part of trade, but is it still taxable? And actually those two are, aren't they? They are taxable incomes. Interest, the dividend is exempt, so I don't need to worry about that one, but the other two are. Now, the interest is often referred to as a question as the heading loan relationships. And all that means is you group together any type of interest, whether it's interest paid or interest received. So what we've got here is we've got two types of interest received from the loan and the bank. So we would just add them together. I mean, if you list them up, I don't think you're really going to lose any marks here. But strictly that's the heading that it comes under. So you group all your non-trade interests together. Now, if you've got any non-trade interests that you've paid, that you've disallowed, then you would be able to deduct that. So let's write a note there. So that's the interest that you've received, and you will be able to deduct any interest that you have paid. All right, remember, non-trade. That's what goes under this heading, non-trade interest. Now, if we go up here, we haven't actually got any interest payable for non-trade purposes. So you might be fooled into thinking, well, that's it, I don't need to put anything in. But we have got something in the question that is a bit of an oddball that you can claim for, and it's actually this one. So it does appear occasionally. If you write off a loan to a customer, so a customer owes you some money, it's not a bad debt that you're writing off. A bad debt's fine. So if somebody buys something and doesn't pay for it, but took the goods away, that will be an allowable expense. But if you've lent a customer some money and you write the debt off because they haven't paid it, then that will be a disallowable expense for trade purposes because you're not a loan company. However, if you've got any interest from non-trading activities, you are allowed to claim that against it as a payment. So if you forget to do this exam, it's not the end of the world. Even quite advanced students forget about this. So this is your loan to your customer that you've written off. So if we add together the non-trade interest received, take off the payment that you're claiming back from your customer, that will net out your income to 24,200. And show your workings, because if you don't get this figure, for example, you've forgotten about the 600 or you just didn't know about it, you will still get some credit for the bits that you've done right. We haven't got any other income to put in because the dividend is exempt. We don't need to add that back. You don't need to mention it's exempt, it just doesn't go in. But what you can deduct is your QCD. This is your qualifying charitable donations. It's normally things that are under gift aid that you've disallowed up here. So it's normally to do with your national charities. So that would be this item here. So I disallowed the national charity because it's not to do with the trading activity. But if I pay it under the gift aid scheme, I can deduct it as a qualifying charitable donation. So I'm going to deduct that, and that will then give me my total taxable profit, which will be 682,400. What will the tax be? The tax will be at 19%, and that will give me 129,656 to pay. Now, the question is asking you to calculate the tax, which is what we've just done, and state the due dates for payment. Now, in order to know what the payment dates are, you need to know what size company that you're dealing with. So we need to add on the franked investment income, which is your dividends that you've received from your UK companies, i.e. the dividends that haven't been taxed but are still part of the company's income. So we did have a dividend received up here. We had this 36,000. So I'm going to add that in to get what we call that augmented profit. So 682,400 plus 36 gives me 718. So the only purpose of doing this is to test the company size. And if that is less than 1.5 million, it means you're not a large company and you will pay your tax 9 months or 1 day after the year end. And the year end for this question was the 31st of March 20. So this will be paid on the 1st of January 1921.